August 14th, 2020. Welcome to the Atlantis Report. Today we have a really distinguished guest, the legendary market and technical analyst Charles Nenner, president of Charles Nenner Research. Nenner identifies as a mathematician and scientist, but he's also a geopolitical and cyclical financial expert. Nenner has been an analyst for over 30 years, providing technical and market research to worldwide hedge funds and banks, including Goldman Sachs, plus brokerage firms, individual clients, and all sorts. Welcome, Charles, from picturesque and humid Amsterdam.
Oh, I wish my parents could have heard what you said about me, but they're not alive anymore. So
Anyway, Charles, this year we saw the global economy collapsing, commerce, trade, and travel stopping at a grinding halt globally. Yet we also see the S&P 500 trading near all-time highs, NASDAQ jumping to record highs, and the Dow hitting an all-time record high. You've been warning of a market collapse for years, and you have a stellar record on your market calls. My question is, Charles, do you still see the Dow crashing to 5,000?
that's the level. And we're right now at a very interesting level. I explained that yesterday. There were a few reasons why in January last year, February, we went into zero stocks. And one of the reasons was that there is a parallel channel. You know, it's a parallel channel. If you have dailies, closes, you connect the tops and you connect the bottoms. And usually you can make a line that connects the tops and the bottoms, and usually it's a parallel channel. Don't ask me why. It's a law of nature. I do much complicated things, but this is for the people who do it themselves and make it very easy. Now, if you make a parallel channel going down from 2009 up to 2020, and you connect all the tops, then the top for this year, the whole year, the yearly top should be 3,400 on the S&P. So there were a lot of reasons why my system said, because the cycle was stopping, get out of the market. So we went into zero stocks. And the interesting thing is, again, now at 3,400 S&P, we're back at the same level. So it's still the same bar that we use. And it just went back to 3,400. So again, I'm now almost at zero stocks. I told some people, you want to stay long, keep some calls, so you have limited risk. And here we have to really see what happens at 3,400. Now, I never believed in in manipulation of markets, because this is a manipulated market because of the Fed that pumps in all the money. The numbers that they compare to are compared to the quarter before. Of course, that was the worst quarter. So the next quarter, not everybody, the insiders know is going to be much worse. Only the people who don't understand how they come up with numbers about the economy think, oh, it's picking up. So I'm very negative. I did cycle work on the pandemics that were for the last 700-800 years, and it all go the same way. So this is going to be much worse than people think. It's already very bad in the United States, but we're going to have the second wave and a third wave, and I have no idea why people think that the Fed can keep this economy in a stock market going, because if it would be so easy, then for the next 1,000 years they would pump in money and everybody would be rich, right?
Right.
So something's not logical over here.
No, I should also mention right here, because Charles has kindly mentioned the pandemic, that he is also a medical doctor. Not that we're going to go into a high-level discussion about the pandemic, but I just wanted to add that. Getting back to the Fed, so do you think that they're making it an even more dangerous place for the individual investor right now and going into the final quarters of the year, correct?
Well, longer term, let me give you an idea. I'm in Amsterdam, and Holland has, I think, the biggest pension funds after Norway in the world. So people feel very secure. They put in a lot of money every year for the pension. It's a law. But the pension funds are required to have a big chunk of money in bonds. They cannot speculate too much on stock markets. But the bonds give them 0%. So people will not have pensions in a few years because the 0% that they make on the bulk of the money. So this is nice that you make interest rates low, but on the other side, it kills the consumer because there are no consumers left because they will have no money left. So it's a short-term thing, and I have been saying this even before Greenspan when I saw this coming, because I look at with my cycles on what I call the super cycle that started after the crash of 1870-75 in Berlin. You're too young to remember that. And it was the end of the super cycle, and every Fed president says, okay, but not while I'm president. I don't want to go into history that it happened in my watch. So they try to prolong it. And in the end, there's nothing they can do anymore.
Right. So I guess are you a fan of the Volcker years and that era more than obviously the MMT we have today?
Well, I give you an example. You know that my work is based on computer programs, neural networks that project when things are going to happen and what's going to happen in such a case that if IBM has a low cycle low and it starts going up, we can calculate how high it will go, and we can calculate when the top is. So what about Volcker? There is a 30-year more or less cycle of inflation, and just when Volcker came there, the inflation topped and it dropped down. So the question is, the philosophical question is, it had to happen because the cycle says it's stopping. Like the cycle now has been saying, I'm down into deflation. So that's why I have deflation. And the expert says, how come with inflation doesn't pick up? Because the cycle is against you. So the question now is, did Volcker do it? It would have happened anyway. Or is humankind built in such a way that it had to happen and they voted for somebody like Volcker to do what they had to do? You understand my problem?
Exactly.
I give you an even more complicated issue. When I was working at Goldman Sachs, I expected a terror attack. And I don't want to go into it. I missed it by a week. But I thought it would be chemicals that kill 1 million people in a subway. So I told my wife, when the market goes up, you can take the subway. Because if they do that, the market's not going up, right? When the market has to go down, it starts to be dangerous. So now the question is, what's the chicken and the egg? Right? Does the market go down because they expect this thing to happen and the market cannot go down? So when I was at Goldman Sachs, I was teaching, says, these cycles work, but what if they kill Obama? I says, they cannot kill Obama as long as the cycle is up. It's a problem in philosophy that if you cannot grasp it, you cannot understand my work.
Exactly. So it's not just mathematics and scientific efficacy
it's
that you...
prediction of humankind.
Exactly. In a previous interview, you called Deutsche Bank the canary in the coal mine. Can you elaborate more about the Deutsche Bank, and do you see them crashing in the exact pattern as, let's say, Lehman Brothers did in October of 2008?
Well, I said that on my work, if they close below 6 or 6.5, I don't think that's the end. Well, since then, we see how much trouble there is on Commerzbank. It's like a very system bank in Europe. And if that bank goes under, then I don't know who is outstanding what with whom, but that's really going to be a crack of the financial system. Now, again, it doesn't matter, with bank runs, it doesn't matter what the facts are. If people say the bank is going under, it's going under. And if they say it's not going under, even if it's worse than we think, it's not going under. Let me give you one more example because it's always a bit complicated. Let's say you own IBM. And IBM is up 50% for the year. And IBM comes out with great results. Now the question is your stock going up and down? Well, that depends on the cycle. If the cycle is up, IBM goes up. And the Wall Street Journal will write, oh, the results were great, and people bought IBM. Now you have the question is they have the same results, the good results, but now the cycle is down, what will happen? So now IBM has to come down, right? So how does the Wall Street explain that? It says, well, investors took profit because they don't think IBM can do better next year. So based on the same information, if you know the cycles, you know the interpretation, and you know what the stock is going to do.
Right.
So I always urge people, take a look at the cycle work and don't listen to all the media. And if something, an analyst says, well, they're going to make 2 cents instead of 2.5 cents, you don't know where the price earnings is going. That's much more important. But since they cannot predict the price earnings, they're busy with saying, well, the quarter is 2 cents or 2.5 cents. I used to have that also when I worked in the financial markets in Wall Street. I says, you take the least of the least because you don't work on how to predict price earnings. If price earnings is 16 or it's 25, isn't it much more important? Yeah, but that we cannot predict. Well, the cycle will tell you if people are prepared to pay 25 or 60 times the profit. That's much more important.
Wow. Um, Charles, I must ask you about what comes after in your mind after coronavirus. Will there be inflation or deflation, and which is worse for the economy?
Well, first of all, I still think, according to my cycles, there is some deflation. What will happen, according to me, is what happened in Japan. The economy will just hang around for 10, 15, 20 years. Deflation is much worse. People don't remember that. First of all, if you look at the history of hundreds of years, deflation is the norm, not inflation. But because the age we have, we remember everybody talks about inflation. Now, deflation is a problem. The problem is, you understand that if you're General Electric and you make refrigerators, and by the time you sell the refrigerators, the price already lower, you have to lower the price and lower the price. If you don't make profit, people are going to lose their job. They don't have money to buy refrigerators. I just keep it with the refrigerators, right? This is the buying power is totally going to disappear. Now, people are going to afraid to give loans to each other. So sometimes in a deflationary period, even interest rate goes up because I'm afraid to give you a loan. I know the economy is weak, but I need 10% from you on a yearly basis. Otherwise, I don't give you the money because there's almost no money left. So this is, if they have deflationary situations, it's very hard to get out. Then you have the situation that you see now that people think they're safe because in real estate, well, people have malls in the United States or office buildings. Nobody pays them anymore. Even Gap says we cannot pay the rent anymore. So also that is not safe. There's nowhere to hide. That's one reason why gold goes up. People think gold goes up in inflationary periods. It mostly goes up in deflationary periods because there's nowhere to go. So people buy gold and put it away.
So speaking of gold, where do you see gold and silver heading in the short to near distant long term?
Okay, well, we gave a buy signal at 1350, 1,350, and the price target was 2,500. The price target was still 3,500. We played this big move down, but we think it's almost over, and I think it will continue up to 2,500. And the very long-term cycle is up for the next 6 years.
Wow.
Yeah.
Because you've also been talking about copper lately on other shows. I've noticed that. What's your take on copper?
I must honestly say that I'm not prepared. People think I have everything in my head, but I'm not prepared. I just looked at it, looked okay for another 1 or 2 months, if I remember well.
Right. So, okay, you're just dabbling in copper now from a speculation sort of from afar, I suppose, right?
Right, right. What I like people to do is, if you go to charlesnenner.com, you get 30 days free research. And I don't have everything always in my head. Take the 30 days research and see exactly how we do it, what we do.
We'll put the links, by the way, in the bottom of the
Yeah.
video for
Yeah.
anyone
And then
to.
anybody who comes to you always gets 50% discount. But they don't have to sign up. It's a very dangerous time right now. You get a 30 days for free. I show the cycle work. Every Sunday I show the asset, let's say the bonds or the euro or the S&P with the cycle below it, with the exact dates. And then you can look for yourself if that date is correct or not.
Nice. So it's a risk-free.
Risk-free.
Taster.
Just understand there's a different way of approaching how professionals approach markets instead of what you read in the media.
Right. What's your take, Charles, on bitcoins and cryptocurrencies in general?
In general, I don't know. I looked at the Bitcoin. I happened to do some research. So Bitcoin is the long Bitcoin, but it's stopping next week. And then showing some weakness into the first week of September. But there's a more important low the middle of November. And the problem with Bitcoin is to come with the long-term outlook. It doesn't trade long enough for me to make quarterly or yearly cycles. I need at least 30, 40 years to make a long-term outlook. It needs data points. So I can, same thing on Tesla. People ask me Tesla, I can tell you for the next couple of months, but I cannot tell you for the years because it doesn't trade long enough.
What's the best investment you've ever made?
Well, my best investments, I usually go along the VIX. We have done it, I think 2 times this year, 3 times last year. And I remember we bought calls like $2.50 and we sold them at 50, 55. And instead of going short S&P, which is kind of nerve-breaking for people if you're short, I always say go long the VIX. The VIX by itself you can trade, but you can trade options. Like for instance, now we're long the VIX. We're long November calls. And in every research piece, that's 4 times a week, we tell you exactly where the VIX is going, when the bottom is there, when the top is there, and the VIX is perfectly reacting to the cycles. And market goes down, the best thing is to go long the VIX. Well, actually, we did very well on gold also. We're still doing very well because we play gold up and down, $200 up, $200 down. We did good in crude, crude oil. Maybe that's the one. We went short at 68 and we had a target of $4. I don't know if you see our research. And we closed at $4 and then I went minus $30 and people even complained. I says, my system cannot calculate what's below zero. So it didn't find it minus 30. So that was because people thought it went nuts when I said it goes to $4, but it did. So I'm still counting on Dow Jones 5,000. Also looks ridiculous, but if this virus really starts to be terrible, you can imagine that economy drops dead.
What about the? I'm going to get back to the coronavirus in a second, but what about the worst investment that you've ever made, and how did it end up?
Now I want to say something, and I really don't have a big ego about these things. I have been asked that by CNBC several times when I was on camera, and it says, I challenge you to find a serious loss for the last 20 years. The system has stops of maybe 0.25%, which means is that if I take the example of IBM. First of all, if the cycles are up, I've never seen that IBM goes down, seriously. The second thing is, if the system says IBM is at 120, if it goes below 119, 18.5, I change my mind. So our stops are like 0.25%.
Right. Okay. So do you invest? You said you mentioned that you buy gold and perhaps silver, and obviously you're in stocks and equities. But are you a crypto fan or not?
I have no idea. I don't even know how to buy Bitcoin. I guess I have to start to start doing it, but I don't know how to do it. So I don't do with the Bitcoin. I always say, let me do what I know. Don't ask me to do what I don't know. Please let me stick, because people always have requests about it. But this, it says, why don't you stick with what I know? Why do you want me to force to say something about what I don't know?
Right.
So the cryptocurrency, again, doesn't have long-term data. So it's difficult for me to make a long-term outlook.
Right. What are some of the key lessons that we should learn from this financial crisis that we're going through?
Well, first thing I would say is there's no security in life. But, this generation thinks there's security in life. And I'm afraid that I'm sitting in Europe. I was born just after the war. So we know what can happen, and we know how hard you have to work to get somewhere. And I don't think the new generation is ready for hardship. I think it's going to break them down. Even in the United States, maybe you remember when Clinton lost, Mrs. Clinton, they had service dogs to help them, to touch the dogs in the university because they were so stressed. So I'm very worried about, how this next generation, if really things get very bad, how they're going to deal with it. What you have to learn is there's no security. It's all artificial security in life.
Really? So then basically that the unsafe world we live in cannot be eradicated. They're going to have to get out there and just do it.
And don't let things go. Don't think, there's always a safety net. There's a Freudian father figure who takes care of us. Because even the Freudian father figure is now, like, say, supporting KLM. Without the KLM would be in bankruptcy. But how many years can they support KLM? The money is going to be finished one day, so it's all artificial. It's, oh, we're not worried because we get, I don't know what the Trump organization gives, $600, $700. Oh, consumer confidence is not that bad because they get a check, and nobody mentions that. So, oh, it's not as bad as we thought it was. Well, at a certain moment, it's finished and you're on your own, and it's very sad if you cannot pay the rent of what you're going to do. But don't think that father figure Freud or whoever the government is gonna save you. Uh, that's the big lesson. You have to change your mindset.
Exactly. You said earlier that I should stick with topics that you know best. Therefore, I must ask you about the stock market cycle. How do you see that playing out? And if you had a 401k and you were a boomer or a Gen Xer, what would you do right now if your money was tied up in 401ks in the market?
Well, the thing I'm most worried about for the investors is the bond market, because the bond market is many times bigger than the stock market. And I have been writing since the last 2 months that we have seen the lows in rates. That means is bonds are going to go down, so you're going to lose on your capital. One of the problem is that people have bonds in a bond fund. If you would have a bond that says $1,000, in the end you get back your $1,000. But if you have it in a bond fund, you don't get it back. So if you have to sell out because bonds go down and you want to take your losses, you don't get your principal back. And people are in sleep mode because the bond market has been going up for the last 30 years, and they don't realize that interest rates can go up and you can lose a lot of money on the bonds. So the first things I would say is take care of your bond exposure. And the second thing I would say is take less positions on the markets, stock markets. Around now, S&P 3400, unless it really goes through, and then you can always buy back. If it goes to 1 or 2%, it means something else. But for now, we're in zero stocks again.
Wow. So then even though Jay Powell has promised to keep the interest rates at historic lows indefinitely, you're still saying that there's a chance that interest rates could rise?
Well, I'm talking about bonds. I will tell you what happened in the crisis here with Greece and Italy. We had this crisis in Europe. The rates went up to 10, 11, 12%, and short-term rates were close to zero. He can't do anything about long-term rates. He can only do something about short-term rates.
Right. So are there any last words that you want to leave the viewers with, in your wisdom, besides the fact that I want them to check out your link, which we'll leave below? Is there anything else you want to just put a final point on this?
Well, I would like to explain to them that financial markets don't move at random. And once you see that, because we do our work, also society doesn't move at random. Like there's a social unrest cycle of 60 years. That's why now after the 60s, the 60s later, and we've got the same social unrest. Politicians don't know this history, so everything repeats itself anyway. And once you understand that, you can look at your own cycle. It helps. You look at your personal cycle and see things don't happen at random, and you can anticipate what's going on. Now the question is, if I can't do anything about it, does it help? And then I always give the example, listen, after summer comes winter, winter, summer comes winter. It's not no, but you can buy a winter coat when you know winter's gonna come. So it's important for you to have a forecast what can happen. And if you think the future is you cannot understand the future, you can never take any measures to be prepared. So the only thing you can do is, if I'm right, and I think I proved it enough for the last 30 years that things can be predicted, then you can do something about it. So it's 50-50. Why don't you take a chance? First look into if really financial markets and other situations have cycles and you can predict what's going to happen, and then you're much more safer in the world.
Exactly. Right. So just have an overall, like a 360-degree view of what's going on. Right. I'm very surprised because your work is highly nuanced. It's not just about Fibonacci ratios. It's really about the psychology of markets and the cyclical nature of things. It's rather fascinating.
Because the important thing is the interpretation of the facts, not the facts themselves. Now we're talking about interpretation. They're going to find a vaccine. They're not going to find a vaccine. It's interpretation. Nobody knows what's going on. So based on cycles, it's going to be okay. And when the cycle turns down, it says, we're never going to find a vaccine. And I say, against AIDS, they still didn't find a vaccine. Who says they're going to, we're going to find it? Maybe they never find it. That's interpretation. And since we're talking about mass behavior and it neutralizes each other, so when the cycle stops, they come up with anything that can go wrong, and then the market will come down. Not based on the fact, based on the interpretation of the facts. So what I want to give everybody that listens to this is understand the interpretation is more important than the facts themselves.
Wow. Great advice. And finally, are you adhering to the social distancing these past 5 months? Have you been wearing the mask when you go out in public, or how are you dealing with it as a medical professional?
I have these N95 masks. They don't have them in Holland. My wife brought them from Brazil. I don't know why they don't have them. I tell yesterday somebody came to fix the television and we all put on a mask. We open the windows, we all have a mask. We don't go anywhere without the mask. Some people laugh about you. I don't care. I try not to be in touch with anybody if I don't have to. Because I'm almost 70 and I have some problems here and there. And I still want to be around for my children. And who's going to take over the cycle work? So I'm not finished yet. So I have to wear a mask.
I love your attitude. Charles Nenner, it's a pleasure and an honor speaking with you today. And I wish you a happy weekend. And stay well. And thank you for your time and for speaking to us at the Atlantis Report. Rock on, Charles.
Thank you. See you again.
Peace. Will do. Thank you. Bye now. Bye.